So Katie was just mentioning how when rates go up, that is good for this ETF, JAAA. Can you tell us a little bit about what the journey's been like the past year, where we were pretty sure that rates were going to be cut, but right now it's looking like higher for longer?
Yeah, it definitely seems like a higher for longer environment. I mean, remember, beginning of the year, the market was pricing in 6 or 7 cuts. Now we're down to 1 or 2 cuts. We think it's probably 1 and maybe even 0. So about a year ago, people were already asking us, when's it time to get out of JAAA? And we said, no, this trade has a long way to go. And here we are sitting in June, and we think it still has another year or 2 to go. The market is telling you that the yield curve is not going to be flat for another 2 years. So I think that's key for people to realize that this isn't like in and out. This is something you can hold for a very long time.
Well, I want to talk about who's buying and who's holding it, because it was interesting. There was a Citi note, I think it was last week, that took a look at the CLO ETF field, and their analysis showed that JAAA was the only one of those ETFs that had an institutional user base, a use case there. So when you take a look at the growth that you've seen, doubling assets over the past 6 months or so, is that institutions? Is that retail? What does the breakdown look like?
Yeah, we really like that piece from Drew Pettit at Citi.
I imagine that you would.
No surprise there, right? And what we also liked about it is they were forecasting the market to grow on a baseline to $35 billion and maybe even up to $55 billion. So that's obviously very good for this asset class. Look, it's a broad range of investors that have been buying JAAA. A lot of retail, also what we would think of as more institutional, but financial advisors, OCIO, outsourced chief investment officer type platforms. Those platforms are actually more institutional as far as experience and ability. But as far as pure institutional pension funds, large banks, we do have some, but it's not the bulk of our investors. It's mostly smaller investors.
What's the specific pitch to those smaller investors, to retail investors? Because CLOs, for some people, might bring back memories of 2008, 2009. And so there's a bit of education in there, I'm sure.
Yeah, you guys are helping bring back those memories, because every time I come on, we talk about that. But yeah, I mean, it's very simple. Look, we're solving a problem that most people have when building portfolios. Where can I get high quality floating rate fixed income with a pretty high yield? And that's, before we launched JAAA, that was very hard to find. And people want floating rate because they don't want a lot of interest rate risk. They want high quality because the economy is slowing down. And obviously, they want those high yields. You showed at the beginning of the piece just how good the returns have been. And obviously, they come with a big dose of disclaimer, because past performance isn't guaranteed a future. But cash last year, returned right around low 5%. That makes sense. That's where the Fed funds is. But JAAA at 9 and JBBB, our BBB CLO, at 17. That's very attractive to investors.
I want to talk about what the impact on the broader market is, especially when you think about some of those projections for how big the CLO space in ETF land could get. There was an interesting piece from my colleague Scott Carpenter interviewing someone from PineBridge, saying that you take a look at the money going into CLOs. That has been a huge catalyst for tighter CLO spreads in the underlying market. Do you think that there is sort of a feedback loop going on there?
Yeah, no question. And it's interesting. We see a lot of street research these days actually taking into consideration the bid from CLO ETFs. It's been a very strong issuance year for CLOs. I think it's second strongest on record, but there's been a lot of liquidations and a lot of amortizations as well in the CLO space. So actually the net issuance has been negative. And a lot of that's also driven by CLO ETFs because of all the demand. Like you said, we've doubled in size almost this year. Others are growing as well. And we think that will continue. And that will consequently tighten spreads in CLOs.
I literally have 30 seconds left with you. But on the other side, if we were to see mass outflows, what would that mean for the market?
Look, we don't see that happening, absolutely. I think it's a very liquid market. We've had outflows before, both in JAAA and JBBB, because the market's so liquid. We had no problem giving investors their money back. This isn't an interval fund. This isn't like the real estate funds out there, so investors shouldn't worry about that.